500 shares of Amazon. Let's make some money. What if I told you that the stocks that you own right now can print you weekly and monthly paychecks guaranteed? Would you believe me? In today's video, I'm going to show you how the wheel strategy does exactly that. Man, and I'll be honest with you, this has to be one of my favorite ways to make consistent cash flow in the stock market. And one of the best things about this is you, a regular person, you don't have to be a financial expert to do this. You don't have to be a professional day trader. You don't have to sit in front of your computer and stare at a screen all day buying and selling stocks. This will take you 10 to 15 minutes a week. Max. I'm about to break it down for you step by step. I'm going to keep it super simple. I want you to be able to understand this so you can do this with your portfolio. Alrighty, so jumping into the computer here. If you saw my last video, I showed you guys how I sold 4 put options on Amazon. And the 4 put options that I sold were at the strike price of $212.50. I collected an average credit of $1.68 per contract. Now remember, every contract controls 100 shares of that stock. So whenever you guys see that average credit, say for example, like here, $1.68, you got to multiply that times 100. So I really collected $168 per contract. When you multiply that times 4 contracts, that gives you a total of $672. That premium that I collect instantly. Once I sell the 4 contracts, I put the $672 in my pocket. Instantly goes into your buying power. You can literally use it right away to buy more stock or just cash out if you wanted to. And as you can see here, the expiration for this was on June 20th. This already expired. And what happened? It expired below the strike price of $212.50. I got assigned 400 shares of Amazon. And also, prior to getting assigned those 400 shares of Amazon, I already owned 100 shares of Amazon, which is this covered call option that you see on the screen here. So as you can see on the screen right here, I sold a covered call for the $220 strike. Amazon was currently worth about $210 when I sold this contract. So to give you clear understanding, the first part of the wheel strategy, I had the cash set aside to sell the put option in order to get assigned the stocks. In this instance, I already own the stocks. So what I sold is a covered call. I don't need to have the money set aside because I already have 100 shares. Hopefully that makes sense. If it doesn't for whatever reason, leave me a comment down below. I will jump into the comments with you and I'll break it down for you step by step even further. So for this covered call, I collected a $2.15 credit. Once again, what did I just tell you a minute ago? What does that mean? $215. Why? Because we have to multiply that average credit times 100. There you go. You're getting it. I see what you're doing. A little slick you. So since I sold that $220 call option, it expired worthless because Amazon was below the $220 strike price. I kept those 100 shares. I never sold them. Then I sold the 4 put options that did expire inside the money. I got assigned those 400 shares. 400 plus 100, 500 shares of Amazon. Let's make some money. So as you can see on the screen right here, I now have 400 shares of Amazon pending. That's where you see the $85,000 right there on the top of the screen. So my average cost for those previous 100 shares was $203.43. That's not going to be the average cost once these 400 shares get added. There's going to be a big average. So fast forward a couple days over the weekend, my new average with the previous 100 shares with the new 400 shares of Amazon is $209.34. You want to make sure that you always sell your covered call above the price of your average cost. So for example, my average cost here for the 500 shares is $209.34. I'm going to sell this at least $210. That way I don't lose any money on the share price and I collect a premium. So I make a true profit. So again, my 500 shares have an average of $209.34. That equals a grand total market value of $104,440 I have in this position of Amazon. Again, I truly do believe that Amazon is super undervalued right now. This stock is on sale. Amazon should be trading at about $245, $250 in my opinion. So as you can see on the screen, I sold 5 call options on Amazon at a strike price of $215. I collected an average credit of $3.70 per contract. What does that equal? That equals $370 per contract. $370 times 5 contracts is going to give me a grand total of $1,850. So let me break this down for you super simple so you can understand how quickly this premium starts to add up. This is insane. So if you add up the initial $672 that I collected, plus the $215 from the covered call, plus the $1,850 I just collected, that is a total of $2,737. And I want you to realize this. This is on a matter of a couple of weeks. So my average share price on my 500 shares is $209.34. If I end up selling these 500 shares at $215, that is a $5.66 profit per share. You multiply that times 500 shares, and you're looking at a total of $2,830 profit. If you look at the premium we collected, plus the potential profit of these shares if they do sell at 215, which by the way, they might, I'm going to be so pissed, but they might sell because this is the weirdest market that we're looking at right now. Anyway, if they do sell, you add up the premium and you add up the appreciation in the share difference, and you're looking at a $5,567 profit in the span of 5 to 6 weeks. If you divide that by 12 months, you're looking at about $463.91 every single month. But I just made that in about 5 to 6 weeks. Do you know how big of a dividend portfolio you have to collect $464 every single month? You got to have a pretty fat, chunky portfolio, to be honest with you. And not only do you have to have a pretty fat, chunky portfolio, but it's going to take you a year to make that type of money. And we just did that in a span of 5 to 6 weeks. Okay, so let's talk about a couple of the negatives. The elephant in the room is obviously that you do need a good chunk of money to sell cash secured puts on some of these big tech companies. If you do not have the money, you're going to have to do what I did. This is what I did when I started years ago. I started buying shares of the stock little by little. I was deploying money into the portfolio, buying shares of the stock, buying shares of the stock. Once I got to 100 shares of that stock, I sold a covered call. I collected that premium and I used that premium to buy more shares of that stock. Eventually, I rinsed and repeat that cycle until I got to 200 shares, 300 shares, 400 shares, so on and so forth. Now, mind you, you still have to deploy money into your portfolio. Don't just depend on the premium from the contracts, because the premium does fluctuate sometimes. But if you do that strategy and you're taking the premium from the covered calls and you're deploying it into your portfolio to buy more shares, along with the money that you're taking from your bank to buy more shares, you're going to scale pretty quickly. All right. So another thing that people call a negative, I don't really think is much of a negative because I'm still going to make money regardless, but I get why they call it a negative, because you could lose potential future income. So if Amazon runs to $225, my strike price is at $215. That $10 difference, I'm not going to get it. I'm going to sell somebody those shares for $215. I'm going to lose the potential future profit of $10. But I'm still going to make money because my average price is $209 and change. So the thing would be, in order to get back into that, right? Once I sell the shares for $215, what am I going to do? I'm going to sell cash secured puts at $215 and I'm going to pocket that premium. The goal is to try to catch the stock on a dip again when it cools down and get another entry at $215. The last entry was at $212.50. Now I'm going to try to get it at $215. And if you happen to get in at that price again, rinse and repeat. You sell covered calls and you're back to doing the wheel. That's why they call it a wheel. Sell puts, get assigned, sell covered calls. You sell them, you sell puts again, get assigned, rinse and repeat. You get it. And again, I don't just do this with Amazon. I do this with several companies. I do this with Nvidia. I do this with Apple. I even do this with the SPY. And right here, you can check out some of the SPY puts that I've been selling. I sold a SPY put that expired on the 24th. I sold it for the $595 strike price. I collected $332 on that. I didn't get assigned the shares. I was hoping I did, but the market ran up a little bit on me. I thought I was going to have a chance to get into that price, to be honest. But then again, I did not get the shares. But what did I get? A guaranteed income of $332. What did I do? I got that money and I bought some Google stock with it. So hopefully this little breakdown right here made a little more sense to you, and now you understand this a lot better and you feel pretty comfortable to start doing this on your own. And if for whatever reason you don't feel comfortable to do it on your own yet and you're still kind of confused, if there's any part in the process that kind of tripped you up and you got lost a little bit, leave me a comment down below. I'll jump into the comments with you and I'll break it down in the comment section. And that's basically how the wheel strategy works. It's simple, it's repeatable, and it's one of my favorite ways to generate consistent cash flow from the shares that I own and the money that I have set aside to buy shares. If you found this video helpful, please do me a favor, hit that like button so this video gets out to the people that need it. A lot of people are searching these types of strategies. They don't know where to start. They have no idea what to do with it. That like button really goes a long way. The YouTube algorithm gets this video to the people that are searching for it. And if you're not subscribed to the channel, subscribe to the channel. Come along. I'm building a dividend portfolio. I have a new series in the channel called the $1 million dividend portfolio. Every month I'm tracking a portfolio that I'm going to grow to $1 million. I started it from scratch. I'm super excited. That's going to be a really cool series. It's going to show people how a regular dude like myself and you can do this thing, right? So if you want to follow along and be side by side and kind of mirror my portfolio, feel free to do so. And while you're at it, go ahead and drop me a comment down below. Let me know if you've done the wheel strategy already. Is this something that's completely foreign to you? If not, once again, drop me a comment. Anything that tripped you up, I'll break it down for you in the comment section. Outside of that, man, I want to thank you for watching. Thank you for swinging through the channel, hanging out with your boy for a few minutes, and I will catch you on the next one. Peace.